Is it time to invest in Chinese stocks? Yes, right now during all this market chaos. And I know what you're thinking, but no. Do not worry. You cannot get coronavirus from investing in Chinese stocks. Just like you can't get it from Chinese food, unless, someone with coronavirus sneezed in your food while you were eating it. And in that case, if that same person sneezed on your phone when you were trying to type in the trade, well then yeah, you could get it then too. So in that case, when you're eating Chinese food and investing and someone sneezes and you get coronavirus, do not blame it on the Chinese. That's the moral of the story. We need less anti-Chinese sentiment and more anti-CCP sentiment. Even if the person was Chinese who sneezed on you, do not blame the Chinese. That's racist and ignorant. I actually heard that Robinhood was blaming their outage on the coronavirus. Not really, but I think by the end, they're gonna end up in that 2% death rate from the virus. They are not gonna survive this. But let's go over some Chinese deals in the market right now, because when everyone is this pessimistic and bearish, there's a lot of deals. And if you like good deals, then you're gonna love our explosive stocks checklist. It's a great market to find these things that explode higher, and then you could jump out of them before the volatility goes the other way. Check out how we do it in this checklist. Link down below in the description and comments. Now let's head over to MacroOps for some fresh research. In this article, we are going over the latest investor letter from Tao Value, who does a lot of Chinese investing. First up is Huya, which I'm probably going to pronounce all these wrong, so sorry. But they are basically the Chinese Twitch. They got the live game streaming, mobile games, PC games, console games. They even have talent shows, anime, outdoor activities. It's Twitch. They have 160% 3-year revenue compounded annual growth rate. Pretty solid. 15% margin too. You can see the chart here. It's not the best chart I've ever seen, but it is a value play after all. If you're the type who looks for a breakout opportunity, you might actually have one right now, but you could also wait until it breaks the 2157 level. And of course, with all these stocks, do your own research, because these are just ideas. Make sure these things fit into your strategy before you go diving for Chinese stocks. Now here's what Tao says about it. Its core esports streaming is facing intensifying competition from a few strong newcomers. For example, like Bilibili. They got exclusive rights for the League of Legends World Championship. Damn. And given this observation, they think that the path to profitability for esports streaming industry would be prolonged because of all the competition, but Huya is and can remain the industry leader. Thank God I never got into League of Legends. My life would have been very different right now. I remember people playing this in middle school. They're probably still playing. It's so addictive. Now, Billy looks like a much better chart, this competitor right here. Same industry, is just like another Twitch. And here, if you're looking for a breakout, you might be close to getting it as well. As soon as it breaks out of this channel, then you could potentially enter. Yeah, I definitely like this chart a lot better. Oh, and I forgot to mention that Huya is reporting earnings as I record this. So if they do report good earnings and the market likes it, that might be just a great area to enter. And you can see the stock is already up before the report, which could be a good signal for what's about to happen. So yeah, this could be a good entry area. Now, the logic behind a shorter term play in these stocks makes a lot of sense. It's simple, right? Coronavirus everywhere, so people are staying inside in China, which leads to more video game consumption. Because how do you hang out with your friends without Twitch, right? Without Fortnite, or in this case, League of Legends. So there's going to be more people streaming, more people communicating over, Twitch. And what you get is a coronavirus resistant business. Just like Zoom took off in the United States, this could take off there. Which leads us to our next coronavirus resistant stock, Pinduoduo. I love these names. So Pinduoduo is a mobile platform that offers a range of products, including apparel, shoes, bags, mother and childcare products, food and beverage, fresh produce, electronic appliances, furniture and household goods, cosmetics, and other personal care items, and sports and fitness items, and autos, accessories. Oh my God, you could have just said everything. Like, why is all this listed out? Well, there you go. They sell everything. E-commerce platform, so why not? So they got 834% 3-year revenue compounded annual growth rate. That is amazing. And 78% gross margins. Ooh. You can see here recently on the chart, there was an earnings miss and a steep drop right here. It just fell off a cliff really. But here's what Tao Value says about it. They actually added to their Pinduoduo position when that earnings release happened and they dropped 22%. That's because they believe it was a misinterpretation by Mr. Market. Investors got mad about their branding investing activity and how it was marked as a full expense. But Tao is saying that's the wrong response and that this is actually an opportunity to add. And as you can see, it actually did recover pretty well. But with a sentiment drop like that, it might be going sideways for a while. Earnings are coming up again in a few days on March March 11th, so it might pay to watch this name because sentiment can always change, especially if it's an overreaction like Tao is saying. You might get an entry point right there. And like I said, this is another coronavirus play because everyone's at home, they can shop online and get this stuff delivered to their house, right? So there's some good short-term catalysts here, and they're good long-term companies because they're value guys really interested in it. One of the best things you can do is just piggyback off of value guys because they're really good at the fundamental analysis, right? But a lot of times they get their money in there too early and then they're sitting for a long time. So you can take their analysis, and do your own analysis a little bit, combine it, and then wait for an actual breakout or for some actual volume and movement. And they did all the hard work for you. It's so nice. And everyone publishes all their research now, so great. And last but not least, we got everyone's favorite stock, JD.com. I did so many videos on JD in the past. It must have been like over a year ago. People loved them. Everyone was very excited about Chinese stocks, like the opposite of right now. And no one was happy when this happened and it collapsed. Well, there was a reason I said it was a 10-year play. And look at it now. It's coming back, and it's come back so strong that it even popped up on my momentum system. I'm in it right now. And part of the reason why is because it absolutely crushed earnings. Huge surprise, 422%. The market loved it. The thing jumped 13%. It's up another 6% today as I record this. And you know the play here, right? JD.com, it's the Alibaba competitor. They're both like the Amazons of Asia. And not only with JD do you have a strong fundamental case over the long term, but now you're getting this real strong short-term momentum, which has been confirmed by my momentum system. And it's the same idea again, coronavirus resistance, because it's at-home shopping. And these Chinese stocks, this area, it's really interesting because people are so scared. And your average guy is going to miss Chinese stocks with this coronavirus, when actually, from what I've been seeing, things are getting slightly better over there. They're improving. So if that's the case, you'll see stocks rebound. So now's the time to jump in and get some good deals if you can. So check those picks out, and remember, do your own research. Like JD.com is the one that fits with my system, so that's why I'm in that one. You got to see what fits in your system. And if you want more ideas, make sure you download our explosive stocks checklist, because it's going to give you the 10 factors we use to find stocks that are ready to explode higher, which in this volatile whipsaw that's happening, you could do really well. So there's a link down below in the description and comments. And if you haven't already, make sure you subscribe to this channel and hit that notification bell so you get email notifications of our future videos. Subscribe, and I will see you in the next video. Stay fallible out there. Bye.